So tell us a little bit of your reaction to what we're seeing from the Monetary Authority of Singapore, recentering their midpoint of their policy band to what they say is a prevailing level. Just another example, it seems, of central banks moving because of surging inflation.
Well, as you said, this is another example of central banks generally reacting to more inflation in the global economy. But there is, of course, one incredibly notable exception, and this is in China. And there we've got the central bank and the government easing monetary policy. They are easing or stimulating fiscal policy, and they're stepping back on the regulatory agenda that we saw last year. And that's profoundly important because, of course, China has the biggest economy in this region. It's got the largest stock market in this region. And it's very positive that even while central banks in most of the rest of the world are moving in one direction, here in Asia we've got a very, very large player doing something different.
Can that help offset some of those recessionary concerns that we're seeing, given the aggressive tightening moves, not only from potentially the Fed and Singapore, but just central banks around the world?
Absolutely, that'll act as an offset, and China is a very, very serious part of the global economy, and I think we need to watch that, the growth that we're going to see there. Now, the government has got quite ambitious growth targets for this year, and it might be that they don't meet them, but they're going to go try very, very hard to stimulate in that direction, and that will have a profound impact on assets in this part of the world.
What is a bigger anchor for Asian emerging markets? So from a currency perspective, is it just this overwhelming, virtuous cycle of strength that we see from the dollar putting on that pressure, or is it still, to some extent, the yuan?
Oh, so the dollar will have a larger impact in this part of the world, and a stronger dollar is a headwind for sure. But then, of course, we come back to how we actually construct our portfolios and the sorts of stocks that we want to buy. And the key there, as ever, is to buy corporates or companies which will thrive irrespective of the level of the currency, rather than getting too fixated on a variable which can move very, very quickly and which is quite hard to forecast. So we take a longer run view on corporate earnings and spend less time worrying about shorter FX movements.
When you take a look at some of the dislocations that we may be starting to see when it comes to the commodities complex and energy, who are the winners and losers that you can pick out of Asia?
Well, it depends what you mean by dislocation. Of course, in the first stages of the conflict in Ukraine, what you saw was this reaction with much steeper energy prices. And more recently, the pendulum has swung in another direction, that the demand destruction or the prospect of demand destruction because of higher interest rates has now been pushing energy prices back down again a little bit. And so that's quite a complicated picture to look through. But of course, markets which are beneficiaries generally of higher commodity prices would include Indonesia, which is a market where we find plenty of stock level opportunity. And on the converse, you've got geographies like India, which face a much tougher time in any rising commodity environment. India is a net importer of most of its energy needs, and that's a country which will have to be more careful around this. So it just depends really country by country.